Home prices continue to climb when everyone said they should go down. We have the highest interest rates we've seen in about 10 years, and somehow home prices are going up. What's going on? That's what we're going to talk about today, specifically one article that came out yesterday by Diana Olick at CNBC. Now, if you don't know who Diana Olick is, Google her. She is the queen of doomsday for real estate. All she has published that I've seen since 2015 is how the housing market is going to crash. Well, today's article is anything but that. She's actually admitting that home prices continue to rise. So we're going to do a deep dive of that article because there's a lot of very interesting factors in here that I want to share with you guys. Now, before I get into this, I want you to really look at real estate the way that it's supposed to be utilized. National data isn't that important when you're buying one house. It doesn't matter what the national average is when you're buying this one property in this one neighborhood, in this one city, in this one county, in this one state. That's all that matters. If you buy stock, if you buy Tesla stock, you own a tiny piece of every Tesla in the world. So with stocks, you should care about all of that. But with real estate, you're buying this one house, not a tiny piece of every property in the country. We are going to look at national data because it overcomes the fears everyone has. Everyone's saying, what if I buy and prices go down? Or they're saying, I don't want to buy until prices going down. And I'm seeing too many people miss out on opportunities because they're waiting for something to happen that just isn't. So don't take my word for it anymore. Let's see what Diana Olick at CNBC has to say about this. Home prices continue to climb with striking regional differences, says S&P Case-Shiller Index, written by Diana Olick herself. Key points: prices nationally rose 0.7% month to month. 0.7%, let's just call it 1%. Month to month, not 1% over the course of a year, 0.7% month to month. Spoiler, there's more at the end of this that's going to be really interesting. And then, of course, she has to say the index's 10-city composite fell 1% year over year. Of course, she has to try and be right. She really wants the housing market to crash, and I don't know why. Home prices in May rose for the fourth straight month. So not just 1 month that we saw 0.7% month over month increases. The article goes on to say home prices in May rose for the fourth straight month on the S&P CoreLogic Case-Shiller Home Price Index. The gains come despite a sharp jump in mortgage interest rates during that month. Well, that's what everyone's saying. Remember last year when everyone was saying if rates go up 1%, just 1%, home values would come down $100,000? I've said that never made sense, right? Meet Kevin. If you guys follow Meet Kevin on YouTube, he said that over and over at the beginning of last year. It didn't happen. And I always said it doesn't make sense. If anything, it should be a ratio, right? If they said if home prices go up 1%, home values will come down 10% or 20% or whatever that number is, that would make more sense. But to say 1% equates to $100,000, think about that. It doesn't make sense. So that means a $500,000 home would go down to $400 and a $200,000 home would go down to $100. Why would you have a 50% decrease in value or a 20% decrease in value? It's complete. It just doesn't make any sense. But that's what we kept being told, right? So many people held off on buying real estate because they were waiting for these lower prices. But everyone missed one important piece of that puzzle when they were making these predictions. And that's the fact that more than 2/3 of homes in America have a rate below 4%. The people that have rates in the 2s and 3s on a 30-year fixed, they're not selling their homes. Either they never want to. I'm in that boat. I bought my house in 2021. I have a low interest rate. I'll never sell the house. We'll have it. My youngest son is 5. I'll be there for at least 15 more years. At that point, I'll rent it out and I'll go buy something else. I'm never going to sell that house, right? Well, there's the other side that says, I want to sell, but I can't. It's kind of like golden handcuffs. I'm tied into this interest rate. The interest rate is keeping me in this house. So what nobody took into consideration was the lack of inventory we're going to have. So what we saw is from March of last year through basically November, we saw rates go up, right? So they got up to the high 6s. Let's just say we've been hovering in the mid to high 6s really since November 10th of last year. We've dipped into the 7s a little bit here and there, but very little. Well, now we have rates in the same mid 6s on a 30-year fixed, generally speaking. It's not a quote. This is not a guarantee to lend. There are many factors that build into a mortgage rate. Get a detailed quote. There, I said it all. So what we're seeing now is because there's such a lack of inventory, we're seeing multiple offers, just like we were in 2021 on homes with much higher interest rates. It made sense when rates were at 2 and 3% that you would have so many people that were able to afford properties that there was bidding wars, right? Well, we're seeing the exact same thing with interest rates that are more than double what they were back then because there's no inventory. That's simply it. Think of it this way. Real estate is the simplest version of supply and demand. If we have a complete lack of supply, because in some areas there's no more land to build on, or the builders just aren't building fast enough to keep up with demand, or you have existing homes that no one wants to sell because they have such low interest rates, but you have all the demand there, If there's no supply and lots of demand, even with rates in the mid sixes, prices are going up. Well, we know for a fact rates will go down in the future. What is it going to be like when rates go to say 5 or 5.5%? You're going to have even more affordability, right? Lower rate means people can afford more house. You're going to have more people coming to the market, but still the lack of inventory, so prices are going to get driven up even higher. All that being said, let's jump back into the article. So prices nationally rose 0.7% month to month, seasonally adjusted. But prices nationally were still down 0.5% compared to May of 2022. Remember, last year, we were going to see prices fall $100,000 if rates went up 1%. Well, rates have gone up pretty much 4%. And from May 22 to today, we're down 0.5%, less than 1%. That market crash everyone was talking about, a market crash would be if home values dropped by more than 25%. We're down 0.5%. They were only off by 24.5%. They just barely missed it. We're just not seeing those things happen. The article goes on to show some cities that have had some pretty steep declines. Seattle's down 11% and San Francisco's down 11%. Look, I live right outside of San Francisco. I won't even go there. San Francisco sadly has fallen apart. So if you want to get a deal on a property, you can buy one in San Francisco and it will turn around eventually. I just don't know when. Prices are rising again because supply is still very low. Current homeowners are reluctant to sell because of their interest rates, given that most are paying mortgage rates that are less than half of today's rates. Demand returned after the initial jump in mortgage rates as buyers seem to be getting used to a new normal. I love that. It is normal, right? What happened is we normalized the rates of 2020 and 2021. We got used to seeing a 2 or a 3 because we had them for like 2 years. Before those 2 years, it had never happened in history. The lowest rate I saw on a 30-year fix was 3.75%. And I saw it 3 times outside of 2020 and 2021. It was 2012, 2016, and 2019. So when we dropped below that, I was shocked and I knew that it would be short-lived. Well, short-lived turned into 2 years. So we got used to that. When the reality is the rates we're seeing today are normal. And because we've basically been in the same range since November 10th to today, people got used to that, right? We're 9 months into having these same rates. So you have people going, well, you know what? I might as well buy now because this is what the rates are. And if rates go down again, which they will, I can always refinance and improve my situation. So here's something I was thinking about this weekend. If you bought at the top of your monthly payment budget, like I did in 2021, right? I had to beat 20 people on my house offer. I had to pay $200,000 more than I wanted to. And my monthly payment was higher than I wanted it to be. I still qualified for the mortgage. It would be fine. But from a personal perspective, the monthly payment was higher than I wanted it to be. Well, if my interest rate is 2.625 and we never will see those rates again, we're definitely not going to see lower than that. There's no opportunity for me to improve my monthly payment. It will always be the same. If you buy a house today with current interest rates, it's a very different situation. You will more than likely be able to lower your monthly payment. So if you bought with today's interest rates, you're going to refinance. So this is the worst case scenario with room to improve, where those of us like me that maxed out our budget in 2021, there is no opportunity to improve. It is what it is. It's a 30-year fix. It'll be the same forever, which I'm very grateful for, but it's still expensive. And if it's expensive, there's nothing I can do about it. Where if somebody buys today and they go, man, this payment is like kind of at the top of my budget, well, at least I know if interest rates go down, I can improve it. This is the worst case scenario. It'll never be worse than this. So with all that being said, if you're considering buying a property, I don't think you should wait for the market to crash. It's just not coming. And I've been saying this. You can watch all my videos. I've been saying this since last year. There was a blip. I'd say there was a blip from October of last year through February of last year where I was able to negotiate lower prices for people, use seller credits to pay their closing costs, use rate buy downs, all these things I've talked about in other videos. And those opportunities, they come every now and then, but they're few and far between. What I've really been seeing more than anything is multiple offers on just about every property. Not just 2, not just 3. I've had some properties have 30 offers, some have 15 offers. It feels like 2021 again as a buyer. And it's not what any of us want to hear, and it's not what I want to tell you. But here's what I want you to know. If home values are going up with interest rates where they are right now, imagine where they will be when they start to come down. So if you can buy right now comfortably, right? Make sure your monthly payment feels good. Make sure the cash out of pocket feels good. I don't want you to be house poor. If you can buy a property right now with current interest rates, get into the house, then when rates go down, you get to refinance and lower your monthly payments. That's a great situation to be in. And when rates go down, you're going to see even more people come into the market and start fighting over homes even more intensely. and they're going to start driving your home value up. So home values will increase. There's no opportunity for them to go down, unfortunately, simply due to the lack of supply. And I'll tell you this, it feels much better to be a home owner when you hear home values are going up than it is to be a home buyer. When you're a home buyer, it sucks. We have to fight. I went through it. Again, I'm with you. I had to go through this too. But we're fighting for properties. We have to get in, right? We have to win. And my team and I are really good at helping people win in multiple offer situations. So if you want to have a consultation on that, click the link below. You can schedule a free consultation, no cost, no obligation, just a Zoom with me, and I'll walk you through the process to help get you ready to buy a property, whether that's today or 2 years from now, whenever you're ready. I will help you. I can help you directly, because the bottom line is it's going to be competitive. But the sooner you become a homeowner, the better it feels when you hear that home values are going up. You're cheering all the way to the bank. But when you're trying to buy a house and you hear this, it just sucks. You got to get in as fast as you can. And most people put themselves in a mindset of, I don't want to compete over these properties. I'm just going to wait till prices come down. Diana Olick has been saying home prices are going to come down since 2015. Every year she has been wrong. If you could go backwards, hindsight being 2020, do you wish you'd bought real estate in 2015 or 16 or 17 or 18 or 19 or 20 or 21? All of those years, real estate went up. And in 2020 and 2021, that was the real beauty, was the rates were so low, it made it more affordable. And anybody who bought before that, they refinanced to those rates anyways. So the right time to buy real estate is when it's right for you. If I can do anything to help, let me know. Thank you so much. I'll talk to you soon.